Hey gang, welcome to another investor presentation. This is the place to be if you want to hear a guy drone on about investor presentations he's looked at for the first or second time. Today we're looking at GHVI, Gores something or other. These guys acquired Matterport a couple months ago, I think. It's been a while since this thing went public, and it was received pretty well by the market. I do own this sucker, so I'm happy with the results here. I think they announced somewhere in February, so maybe a month ago, you can kind of see that the stock really started to run quite a bit. And then it fell off a little bit. And recently we had that SPAC sell off, which impacted the stock all the way down to $13 as of Thursday. We've got a bit of a rebound happening right now. Who knows whether that lasts, but clearly the stock is doing pretty well if you bought it around the $10 mark near NAV, where it was trading for quite a while. Actually, this won't go back further. Why would you go back further? Did this thing premiere this early? It might have actually, because I think I actually own units of this. I haven't split them yet. So high level, guys, this is a hobby for me. So please don't take anything I say here as fact. Please discuss anything and any investment decisions with a qualified investment professional. I am not that. I'm just a guy who's droning on and trying to avoid work here. Let's see, Matterport. Investment highlights. Massive, unpenetrated, 240 billion plus total available market. I love it when they talk dirty in these investment presentations. All of these presentations are going to have some sort of ridiculous total available market nonsense. Whether or not that's true remains to be seen. I do know what Matterport's about. They take 3D imagery of places. I've seen them. I kind of dig the company, but I wanted to dive into the investments a bit more here. They're a market leader fueling the digital transformation of the built world. Let's close this here. Unrivaled software and data platform with significant expansion opportunities. Global blue chip customers spanning diverse end markets, rapid growth, efficient customer acquisitions, and expanding margins. And a proven leadership team with large scale platform experience. All right, so here's their leadership team. A bunch of dudes that I'm sure worked somewhere else. Worked at Google, amazing. This is how these always go. They kind of give you a high level overview. I don't know any of these people, so it doesn't give me any value here. Company overview. Again, 230 trillion global building stock today remains largely offline. 4 billion buildings, 20 billion spaces offline and undervalued. Taking your building online with Matterport to design, build, promote, and manage your most valuable asset at your fingertips. So this is what Matterport does, 3D imagery of homes, spaces, whatever. I first learned of them, and I didn't even know this was Matterport that was doing this until this acquisition. When I was looking for a home a couple months ago, if you're on Realtor or Zillow, some of them have these 3D images, and they're very, very cool. And I really enjoyed when a house had that because it kind of lets you see the house without having to go there. Really good in the world we're living in today. The question is that going to continue in the future? Are people going to buy homes without visiting them? If that's the case, this is the type of crap that's going to do well. And I don't think the case here is only for real estate. I think the case here is for other things. Again, they're talking about transforming building into data, and then the data will increase the value of every building. Great. Looking at $100 million run rate in the revenue side, 10 billion square foot captured. They're working in 100 countries, and counting. Big growth in 2020 for obvious reasons. Stay at home. People still want to probably buy homes. It's easier to do that if you have a 3D modeling. And hopefully I'll go to the website later and kind of show you what this is about. But like I said, I loved it. One thing that's key here is what other people think about it when they're not investors, because that's really who's driving the revenue side of things here. And my wife, my love, both work. She was in love with any house that had this layout. She mentioned it multiple times. It's like, oh, I love this 3D thing. I think this is the next big thing in real estate. Realtors, home listings, they're going to need to kind of transition into this world, a world of 3D home imagery, where when you go to Realtor, when you go to Zillow, every house isn't just 30 random pictures. It's a walkthrough of the home, which is what Matterport does for you, and it's kind of awesome. So they're looking at, hey, we can do more than just real estate. There's this hospitality, commercial, industrial, corporate, construction, travel, real estate. Like I said, retail. I think hospitality is a big one here, like Airbnb listings. Yes, if this is cost effective, Airbnb listings, hotel listings, you can look at your room before you book anything with a 3D image. Retail, I can see retail using this, like going to a store. Not everybody loves that experience. If you can sort of have that experience at home just by having 3D imagery and a walkthrough in a store, that'd be awesome. Um, and if you can even click on each item and say, hey, I like this item, I like that item. I think of something like Crate and Barrel. You go to a Crate and Barrel store and it's minimalistic in nature because they have a lot of open space, and maybe like here's a little room design, here's a little room design, here's 7 couches, here's 7 tables that we have out on display. Why can't that be online? Why can't I go to a Crate and Barrel store online where I can just use Matterport's technology and kind of walk through Crate and Barrel and look at the things I want to look at and say, hey, that looks nice, that looks nice. Why can't they design rooms that are essentially selling spaces, like online rooms? I've gone to a Crate and Barrel website. I'm talking about real estate a lot because I just bought a home, and they have like, hey, here's stuff that goes together. Why can't they use this technology to design a room on that website and say, hey, here's a room, and you can look at that room and say, hey, I like this, I like that, maybe that looks good. Why can't you design your own stuff like that? It's the possibilities here I think are endless. If you look at insurance, I think this is key. Like if I can just do this at home, if I can do a walkthrough of my own home and it's not super expensive, if there's an insurance claim, I don't have to write down what I own. It's all right there. It's all 3D imaged. I can show the insurance guy, hey, here's what's at home. Here's what you owe me. Give me some money, please, because it's pretty, pretty cool. So 250K plus customers across diverse verticals. Again, real estate, big one here. Travel and hospitality, Airbnb. I think that's another big space for them. Industrial and facilities. Yeah, I don't know much about that, but I think companies can certainly use that in their own plant design. Insurance is a big one where I think claims are just going to be much easier to deal with if you've got this already done, whether it's for your own home or whether it's a big business. You own a store, you own a restaurant, you own whatever. If this is cost effective, that you can take these pictures on a consistent basis and have a 3D imaged place that you own, it's going to make it so much easier to file claims or file repairs or whatever you need to do. Um, So they're kind of showing a couple of companies, I think. So Talon, global infrastructure services contractor utilized by industry leading. So why Matterport? Digitizes costly, slow, and inefficient site survey process, delivers measurable data accuracy within 20 millimeters. Open architecture enables frictionless integration, blah, blah, blah. So current use cases: construction, equipment design and installation, facilities management, as-built documentation, expansion over time. They've grown their booking 60% with Talon. Cushman and Wakefield, real estate. I think this is the obvious solution for real estate. Virtual walkthroughs are huge. Like I said, I love them. So they're saying, hey, we're the digital platform for the built world. They're in-person to digital communications, Zoom, broadcast to streaming, Netflix, physical digital payments, PayPal, physical to digital buildings, Matterport. I don't know if that kind of aligns because it's not. But I guess I sort of I can see it. It's digital, physical to digital. That's the move. I guess they're sort of saying that, hey, you don't need to go to a place to explore it. You can use digital photography through Matterport to do it. 18x growth over the past 2 years from 14K to 250K subscribers. Clear market leader. I don't know anybody else who does this. Probably somebody else is out there, and they're saying 100 billion plus potential market cap. So, um, yeah, they have obviously high expectations for this company. They've got 4 billion buildings. That's their opportunity. Again, we're talking about the total accessible market. Um, the ability to penetrate it at 1% penetration, they're at 200 million spaces, 2.4 billion annual recurring revenue. At 5% penetration, they're at 12 billion annual recurring revenue. That's pretty impressive. There's a lot of buildings out there. If they can get this product into those buildings, um, the upside is generous. Um, it's enormous, really. Um, and then, that's just moving them online. There's upside in digital property insights and services if they can provide additional things. It's a much bigger total addressable market, much bigger um, optionality because you're getting a lot more per space per month in revenue. So your annual recurring revenue is 5x basically what you showed before. Um, so they got capture technology. That's really what this is about. They can capture data, 3D data construction. Apparently, you can do it with a smartphone. It's pretty impressive. They've got a platform ecosystem. It's AI powered insights. This isn't probably anything that a consumer like a me would need, but for corporations, for realtors, whoever, they might need some of that data. And then they've already got a ton of data with the library of buildings they've collected, so they can probably do something with that. Their case, what can you do with that data? Who knows? But you can probably do something, right? So what are they doing with this data? They're segmenting floors and rooms. They can segment and classify objects, which is kind of comes back to the retail thing. If you can do this, if you can classify objects, why can't you just create a store online? Measurements, analytics like that. Hey, we can measure up to basically to what you need done. So if you're constructing a building, potentially it's, hey, I'm just going to take a 3D image of this place. I don't need to hire anybody to measure these things. I can get a big old outlay of data just from taking some 3D pictures and getting that data and subscribing to some service that these guys offer. Um, and this is kind of, hey, what can we do in terms of insights for commercial purposes? Hey, how many of my retail stores have at least two checkout counters? How many windows in the building? Pretty impressive data. If you're looking at, hey, remote property management here, you can see where the sprinklers are. You can kind of label everything as you need to and know exactly where it is. Pretty good information in case of whatever. I'm not a property manager. I don't know what it's for. So really, what are they doing in terms of the growth potential here? Um, Unlocking the software as a service flywheel. Essentially, once you get subscribers in the door, which they've started to do, growth from 14 to 250K, you can upsell them other services, expand the use case. We're talking about enterprise, different applications, getting larger customers to buy into the product that they're offering, expand internationally. I think they're mainly in the US right now. And then, potentially they're thinking of some sort of third party marketplace in terms of application development, integration, scaling the data they have. And you can potentially see a lot of cool use cases, like I mentioned. I would love to go into a furniture store without having to drive anywhere because you don't know what they have any specific week. If they can update that stuff on the fly, if they can label it with all the items that are there, if you can just click on it and boom, I'm shopping. It's awesome. So before we get to the financial overview, let's actually check out this company. If you don't know what they're about, they are a 3D imaging company. You can use a wide variety of 3D cameras, including your iPhone, which is pretty cool. And apparently Matterport makes their own too, which is Neato Burrito, which is another source of revenue for them. They've got their own camera that they sell for $3,000. But if this thing works with the iPhone, what do I need it for? So let's look at what this thing does. You've got a lodge over here shot with their camera. Explore the 3D space. And this is what it looks like. It's very, very cool. They take a ton of images anywhere you want it, and they kind of design a 360 view of the land around you and the space around you. It makes it very easy to look at homes and imagine what the home looks like and essentially know what the home looks like versus just looking at some pictures that a realtor updated or uploaded that may not be very good. And this is set up in a similar way that Google Maps is set up in. You've got the day change. Did they take us during nighttime and the other one during daytime? Outrageous. Maybe it looks better at night. I don't know. Oh, I think they were probably trying to show the home at night, how it looks with the lights on. That makes sense. That makes sense. So during the day, we're exploring the outdoor area. I mean, this place is, I mean, I wish they would kind of stay day or night. Pick a lane, whoever's taking these pictures. But I mean, you can see the coolness of this technology when you're wanting to buy a home. If you were in the market for this mountain lodge that probably costs millions and millions of dollars, I mean, this is very cool. You can kind of explore the entire place, whether it's a hotel, whether it's a restaurant, whether it's an Airbnb, whether it's a home. It's pretty freaking impressive. What else can we see here? There's a school. I kind of just want to see a home. A home. Give me a home. All right, so this is a home. 486 Hidden Lane. Can we buy this sucker? Doesn't this make shopping for a home so much better? You don't have to go inside a home to know what you're looking for. Obviously, it helps a bit, but with the advent of people buying homes without even seeing them, that's happened multiple times, even in my area where the market isn't super hot. People move across country, they want to buy a home, they want to buy a condo. This is what they want to see. They can't visit it on their own. They want to see a walkthrough like this. It's literally awesome. Like, this technology is great. I absolutely love it. And I loved it when I was buying a home. And sometimes that's all you need. You need something that's cool that people like, and that's going to take you a long way. As long as you can execute on the product, you can take it into multiple industries. And if those industries buy into your concept, this could be a thing that's spread further than. Oh, what's going on here? All right, so you've got an immersive, effective virtual store. See, this is what I was talking about. It's a new way to shop where you're basically shopping without having to go to the store. You've got the store layout out there. It seems like every item is basically labeled. You can go to whatever area you want to go to. Hey, I want to look at kitchen stuff. I can go to the kitchen stuff. And then if you want to buy an item, or if you see something that you like, you can click on it and say, hey, well, this is what this is. I can hit more details and go to the actual store. Like, this is how I imagine shopping in 2023, 2024, right? I could see stores buying into this in a big way because I'd love something like this. I'd love, especially furniture shopping. This is like the best use case scenario because furniture shopping is it's hard to say one thing, but it's also somewhat annoying to. And what are they doing over here? I don't even know what they were doing over here. They're doing some crazy things. I'm gonna pause it. So furniture shopping is a pain in the butt because you have to go to so many stores, and just being able to go to multiple stores virtually would be so awesome. You can spot one thing that you like, and if, hey, I like that, I can check it out in store if I want to. I could just buy it right there. Not only is it good for the customer, it's good for the retailer because they get more visits per square foot without anybody having to step into the store, right? The improvement in your customer experience is huge. It's not only an online improvement, but also in-store improvement. If I could picture some of these items in store, if I could, like I said, if they could design rooms for me, they could hire personal decorators that design an office for me, and I say, hey, I have no taste whatsoever. I'm just going to buy all of these things. Or I can go into this one room and say, hey, I like this desk. I don't like that, but I'll buy that desk anyway because I like it. I mean, this is the future of sales for me. This is the future of retail for me. Obviously, you can't do it for everything. Like, I'm not going to go grocery shopping like this, probably. But for furniture stores, for, like shoe stores, whatever, sure, this can work. And it can work in other industries, travel and hospitality. We talked about that. Insurance, homeowners. What's the pricing like? I wonder. Is this super expensive? So you can buy this camera for 3 grand. What a deal. So you've got a free forever, which gives you 1 active space and 1 user. You've got a starter, which is $10 a month, which gives you 5 active spaces and 1 user. You've got a professional, and you've got a business, small team collaboration, automatic face blurring. So it does seem like if you want to do I don't know if an active space is a home or if it's just one room and you have an iPhone that's in beta. What is a space? A space is a 3D model of any building or property. Yeah, so you should be able to do your home. So it seems like you could do this for free. So maybe I'll try this if I get a new iPhone, because I'm sure my old iPhone doesn't support 360 stuff. So if you have the technology, you can basically take pictures of your own home for free, it seems like, and just, view it in the cloud privately, download the photos and the videos and take measurement. That's really all I can do. If you're moving on up, if you're like potentially selling your own home or something without the help of a realtor, you can potentially move into the starter spot, which is $10 a month. And this is the software as a safe service space of things. If you're a, a realtor agency, maybe you're in the professional scale, maybe you're in the business scale where you have a lot more active spaces. If you're listing a lot of homes, if you're taking pictures of multiple factories, whatever. So there's a different plan for everybody, and there's a free plan for the people who are cheap like me. So that's interesting. Um, and that's, I'm assuming, to kind of build up the, hey, this thing's cool, maybe we should use it, maybe we should do something with it thing, and get people into uh, the starter package, and that'd be sweet as a shareholder. So financial overview, cool graphics here. Powerful software as a service model, 18x subscriber growth in the last couple of years, mainly in 2020 for obvious reasons. 82% gross margins. Yeah, I would think that the gross margin here would be pretty damn good, simply because it's mainly software, right? There's a camera, a physical, technical aspect of things, but once you sort of have the customer in, um, even if they're using their own cameras or if they're buying your own, it's mainly just stuff that's already done. You can certainly add upgrades to it, but it seems like they've got a product already created that's going to be a pretty high margin product. So strong customer retention through 4Q 2020, which is good. Rapid revenue growth, profitable unit economics, 12x 2020 lifetime value versus acquisition costs. That's always good to see. Doesn't say how long the acquisition to replacement revenue is. By that I mean how many months does it take to cover the acquisition cost before that customer becomes profitable, essentially, or close to profitable. Accelerating subscription mix, that more and more people are becoming subscribers. Oh, this is by 2025. Okay. So 2023, it's 53% are subscriptions. By 2025, it's going to be 86%. I don't know what the other part is. I'm assuming cameras, and then they're going to grow gross margins. All right, so they've got a subscription model. So they've got other and subscription. Other revenue is comprised of product and service revenue. So I'm assuming cameras, and I don't know what service revenues would be. So even though they grew their customers by a metric boatload, they doubled their revenue. Do they have the customer? Oh, there you go, payback. They have the customer count. All right, I'm going back to the beginning here where they had customer growth. I feel like it was like ridiculously high. Yeah, so they went from 40 to 150,000 subscribers. And it must be that a lot of these subscribers are free level subscribers, because the revenue clearly didn't go up that much. You went from 46 million to 86 million. You're going up to 123 million in 2021. That's reasonable. That's probably close to the truth. I think potentially some of those subscriber acquisitions were towards the latter part of 2020. Some of that will flow into 2021, but it seems like they went from 14K to 250K and the revenue only doubled. Probably a lot of free subscribers in there too. But if they can convert those $0 per month to at least $9.99 a month users, then you're looking pretty good here, and the product is there. The question is, 2020 was an odd year. Everybody was at home, and the use case for something like this was as good as it was ever going to be. So it's not crazy that they grew their subscribers. If people knew about this product and they knew that there was a free offering out there, they'd probably be using it just for fun, because it's kind of a fun thing if they have the right technology to use it. It's a matter of, is this going to continue post 2020, post 2021, really, once people are vaccinated and out and about? And can they transition just from that real estate space into other spaces? Because the technology is there. It's cool, it's usable. Can they convert those subscribers from free subscribers to paying subscribers? Can they make a use case for more than just retail or real estate? Sorry. Can they transition into retail? Can they transition more into those commercial uses? They clearly have some customers that are there already. Can they get more? And apparently they're thinking that the answer is yes, because they're growing at a pretty rapid pace here, 59% annual growth rate. It's pretty damn good. Gross margins are going to improve as more and more people transition into the subscription as a service space. They have 50% in 2020, probably similar to 2021. Then once more and more people are subscribers, they're getting higher gross margins because less of their revenue comes from products and other services, whatever those other services are. And you can kind of see that in the revenue as well. The black subscription revenue is higher gross margin, obviously, than other products and services, which I'm assuming cameras, some other things that they may have. So the LTV so the lifetime value versus cost of acquisition is growing quite a bit. I don't know how they calculate lifetime value, calculated as the quotient of the product of the average subscription revenue per subscriber multiplied by subscription gross margin and revenue churn divided by the quotient of sales and marketing expense and total new paid subscribers. So in essence, they're saying that between 2019 and 2020, their cost of acquiring a customer in relation to how much revenue they're collecting from the customer went down, making for a better ratio of the two, right? And that's sort of shown that the payback in months has gone down from 30.6 to 9.3. Basically, before they had to spend a bunch of money to probably get a bunch of customers that were on the free end of the scale. Now they're spending maybe a similar amount of money, but they're getting a lot more revenue from those customers a lot faster. So more and more people are converting from free to subscription, or they're doing products, or they're buying some of their products, whatever. So they have an attractive unit economics that basically makes them profitable, which is surprising for a startup company like this. And if you've looked at some of the investment presentations we've gone through, or if you've looked at the majority of presentations in the SPAC space, not a lot are profitable right now. So that's good to see. Their revenue is still relatively low, but that's got potential to grow. And since they're a high margin business, that's worth more than revenue in a low margin business. So they've got a lot of monthly recurring revenue. They're expanding that. What is this here? They're growing that. I don't know what this is supposed to mean. Initial current. Oh, okay. So they're basically saying that their initial monthly recurring revenue is growing. So they're adding services, whatever, to those clients, customers, to expand their monthly revenue. Overwatch is updating. Hey, obviously they're expecting strong revenue. What are they thinking? Hey, they had a pretty good December run rate at the end of 2020. They're pushing that into 2021 expectations. Subscriptions are going to go up. Products and services are going to go up. 123 million in 2021. The interesting thing is this seems reasonable. They're not a huge amount of growth in terms of revenue. If you kind of think about 46 to 86 to 123, that's similar year over year growth in terms of millions. This seems like it's expanding a lot more in 2022. That's the question mark here. They've got a good product. I like it. Is it going to continue to grow at the pace it's grown post-COVID, essentially post the pandemic? I think the answer is potentially. I think that 20 to 21 is very, it's maybe even pessimistic here based on what happened in 2019 and how far into 2021 and we are already without any sort of changes in how we approach life. That the question is that going to continue into 2022? Maybe it's going to flow into a later part of 2021. Are people going to change the way they view home purchases? Are they going to want to use software services like this more or less when that happens. I think the product is good enough that I'm relatively optimistic about growth potential here. Um, and I like this as a long-term hold, potentially depending on the valuation. So these guys are valuing it at 2.9 billion. The good thing is that they're getting a 345 million in cash, a $300 million pipe, and then most of that is going to cash, which is fantastic, right? Um, I really like that. Um, 12% GHVI shareholders, so you don't get a ton of the company, but that's fine, whatever. Valuation doesn't seem absolutely ridiculous for the type of growth this thing has. You're talking about an 11.2 multiple of 2022 revenue, probably closer to um, 15, 16, 17 to 2021 revenue. Sort of in line with some of the higher growers, maybe even lower than some of the higher growers in the tech space today. Um, Not absolutely ridiculous. I mean, it's not cheap by any means. You're talking about 20x, 18x 2021 revenue, closer to what, 86 million, almost 30x of 2020 revenue, something like that. Um, that's not cheap, but you're also getting something interesting because this isn't anything that you can buy on the market today. It's an interesting company, and it's a company that doesn't make you think that it's silly. Some of the SPACs that I've reviewed, I kind of think about the last one I did where it's like, hey, we're digging for rocks on the bottom of the ocean in order to get EV materials. You kind of think about that and it's like, man, that is a wild idea. Probably isn't going to work. Might. So, if it works out, I have a pretty good chance of multiplying my money by a lot, but there's a pretty high chance that it's going to go to zero. When I look at something like this technology is already in play. They're already getting revenue, and not a huge amount of revenue, but they already have a bunch of customers. And it's technology that I've seen. I've used it online, and I know that it's really, really cool. And I can right away, as an investor, think of other use cases for it that I think are going to be cool in making that experience better. And that sort of thing matters because if I look at some of these investments, some of these SPAC investments, they're speculative to say the least, right? And even though this is priced, pretty valued pretty highly and still somewhat speculative, I can envision the product being used in a lot more ways than it's used today, and I can envision the revenue growing at a pretty good multiple to support the type of valuation this is getting, right? And remember, this 2.8 billion is at $10. So now the stock is trading at 15.50. So that's 55% higher. So you have to bump this up by 55%. What does that make it? Closer to 4.5 billion, something like that, off the top of my head. I could probably calculate it, but I don't want to. 4.5 billion less cash. So you're talking about 3 billion enterprise value. Talking closer to like 18x, 17x, 18x of 2022 revenue. Probably 40, 50x of current revenue. So that's expensive, but I like the company. I think this is cool. I think they have an attractive model. If you look at the software as a service space, it's priced like this already. You look at something like DocuSign or Twilio. I mean, what are they as far as price over sales? I mean, they're in the 30s as well, right? So this is kind of, it's not necessarily super comparable because Twilio is a bit further ahead in terms of their revenue generation and their adoption, but you know, but I don't mind it. I think Matterport is neat. I think the technology is good. I think they have the potential to expand their revenue. You know, if their 59% growth is anywhere close to that, I think this is going to end up being a pretty good deal in a couple of years. It might take a while to get there, but I think they have the capacity to not only grow at that rate, to potentially expand it, because there's a lot of use cases for this thing. And once you get the customers hooked, once you've got them on the books and once you've got them on a subscription service, the prices aren't ridiculous. We looked at the prices; they're not outrageous, anywhere from 10 to $300 a month, depending on what you're using it for. And I mean, a large business is not going to scoff at $300 a month. That's nothing to them. Even a regular user, that's less than a Netflix subscription. If you're using this for a business or whatever, you can probably get by with a $9.99 a month subscription if you're just flipping houses or something like that. And if it helps you sell your house for $1,000 more, it's worth it, right? And I think the value add here is real. I think I think it's real, and I think the valuation is not ridiculous. It's getting, it was a bit hefty when it was in that $25 range. People were really getting out there, but when it dropped into the 13s, I thought about picking up a bit more, but I already have a pretty hefty position here. I like this company. I think this is a company that's got a lot of potential. This is one of the better SPACs that I've seen in terms of having a product out there that can that already has a very good use case in one industry that I've seen, and that can potentially expand it into multiple other industries and be a huge player in those industries. The building space is very, very old school. And this is a way to change that, right? If I can shop digitally in a store, if I could buy a home digitally, if I can look at Airbnbs digitally using technology like this, I'm all in as a customer. And that makes me feel good about being an investor here. An early investor at a valuation that's, pretty optimistic. It's in line, or maybe slightly below some of the other high growth service as a software as a service companies at at the current price point. Remember, these are at $10. Right now it's closer to $16. So the valuation isn't particularly amazing. It's not like I'm getting a deal here. I thought when I bought this at 10 and when I saw the deal announced, I was happy with it. Um, and I was happy enough that I didn't even sell at 24, even though it hit there. I was like, well, I think for me, this is a long-term hold that I can wait and see how it plays out. Um, they're getting $600 million in cash, pretty good cash infusion. Um, I think from some of the Gores SPACs, and if you're not familiar with Gores, they launch SPACs like it's candy. They're just throwing them out there all the time. This is GHVI, so this is their sixth one. They already had five other ones. Some of them were kind of duds, to be honest. This one I kind of like. This is probably the best one for me. Even though some of these had like a massive 1 year return, they kind of show a 1 year return here. Um, they're not amazing companies. Like UWM is actually at like $7 right now or something like that. What's Luminar at? It was in the 30s or something. Whoops, Luminar stock. New York Stock Exchange, maybe $22. Laser. So that clearly dropped off, but it's still, some of these SPACs have done well for these guys. And I think Matterport is going to be an interesting one. For me, I don't generally hold a ton of my SPACs post acquisition, but I think this one I will. This is probably one of the half a dozen that I really have a good feeling about in terms of the technology being quite cool. And sometimes that's all you need. You need a cool product that catches on, and you need multiple use cases that can help you expand your revenue. And do I think they can double their subscriptions in 1 year between 2021 to 2022? I don't know. I mean, some of this stuff is probably pretty optimistic, but I think even if they're decently in this range, they don't have to be there because of the gross margin that they can achieve off of this software as a service model. This is going to be a decent long-term business, and I don't know if they have too many competitors. And I like it. I'm going to hold this for a while. Might be some ups and downs. It's a SPAC. There's a lot of risks with SPACs. They could rise to 25 and drop to 15 in a matter of weeks. as we saw in the last couple of weeks here. I'm not buying more right now just because my position is relatively hefty already. It's not huge, it's a couple hundred shares at most, but um, I try to limit my exposure to individual holdings a bit much. I'm mostly an index fund investor, but when I look at SPACs, I like GHVI, I like Matterport. I think it's a good company. I like what they're showing here, and they have a cool website, which is always important. And maybe I'll sign up for their free service and see if I can map my house when I get a new phone that actually has the capacity to do um, 3D imagery. So that's it for Gores Holdings 6 Matterport. Pretty cool company, pretty cool product. Seems like a decent stock. Valuation is, as always, relatively hefty for some of these software as a service companies. If there's a market correction where tech gets punished, there was a little bit of that in the last couple of weeks where tech kind of struggled, and obviously that was shown in this drop from 25 to 15. This thing's going to fall like a rocket to the bottom of the earth. Um, so that's the risk that comes with high growth names. If they miss one of their earnings, if something goes down, I think this thing's going to be a volatile stock. So it's not for the faint of heart. There's obviously dilution that's going to come with warrants being exercised. I also hold some warrants because I think I still have units actually of this, like I mentioned before. Um, so dilution is going to come. So you have to keep that in mind as an owner of this stock. But the deal structured pretty well. These guys are growing pretty well. There is opportunity here for this thing to just be an explosive grower in the next decade. You know, if they can execute on some of this stuff, if they can expand into other industries, if the retail thing that I talked about becomes a thing, this 2.9 billion, 4 point whatever billion valuation is going to be a deal in my mind. So that's my opinion on it. As always, I am doing this as a hobby. I'm going to hold this sucker long term. I'm long on Matterport GHVI. Whenever they transition into Matterport, I'll still be long. As always, talk to a qualified financial advisor before you make any decisions. I am not a qualified financial advisor. I am just doing this for fun. If you guys have any SPACs that you would like me to review, just leave a comment down below or send me a message and I'll take a look at any of them. I find this very enjoyable and I hope you do as well. Hopefully I didn't ramble too much. Thanks for watching and have a great rest of your day.